Last month, Google asked investors for $85 billion. And that's strange because Google is one of the richest companies that has ever existed. So why would it suddenly need to raise money? The answer points to the most dangerous moment the entire AI boom has faced so far. First, just how big is $85 billion? The largest company debut in US history was Alibaba at $22 billion. Google is trying to raise nearly 4 times that. And here's the strange part. Google normally does the opposite. It spends money buying its own shares back. Now, all of a sudden, it's selling. Why? The official answer is simple. AI is brutally expensive. The chips, the data centers, the electricity. Even a money machine like Google has to scramble for cash to keep up. But there's a deeper reason, and that's the real story. Because Google isn't alone. A wave of giant AI fundraisers is hitting the market right now. SpaceX, now merged with the AI company xAI, just went public in June. Anthropic is heading toward the public market next. So is OpenAI. Add it all up, and investors are about to be asked for hundreds of billions of dollars in brand new money. And that phrase, new money, is the whole key. Here's what most people miss. On a normal day, when a stock goes up, no new money actually enters the company. The shares just change hands. One person sells, another buys, and the price they agree on becomes the new price for everyone. Picture a stadium full of people trading one rare card. The moment someone pays a little more for it, every identical card in the room is suddenly worth more too, even though almost no real money changed hands. That's all a company's value really is. Not a vault of cash sitting somewhere, but whatever the last person paid, stretched across every share, which is why it can swing so fast. But selling brand new stock is a completely different beast. There's no card trading trick here. When a company puts tens of billions of dollars of new shares up for sale, real buyers have to actually hand over that money in full. It can't be imagined or implied. It has to exist, and it has to move. And that is the test. For years, the AI trade ran on pure belief. NVIDIA, Microsoft, and Google soared. Private giants raised dizzying valuations. Believing was enough to push prices up. But selling this much new stock forces that belief to convert into cold, hard cash. This is the moment AI has to prove it's actually worth what everyone says it is. And the scale is unlike anything we've seen. Last year, the entire US market for new stock debuts raised about $44 billion total. The biggest year in history was around $142 billion. Now the AI pipeline alone is talking about $300 to $400 billion. That cash has to come from somewhere. To buy all this new stock, investors may have to sell something else. Their NVIDIA, their Tesla, their index funds, or pull money out of savings. There's only so much cash to go around, which is exactly why Google moved fast. Google doesn't want to pop this bubble. Google profits enormously from it, but it knows investor money is finite, so it's racing to scoop up demand before Anthropic and OpenAI can, and it's offering something that feels safe. A profitable, already public company with YouTube, ads, data centers, even its own chips. The pitch is basically, get your AI exposure through us, and if AI disappoints, well, we've still got YouTube. Grab the money while confidence is still high. So here's the part worth remembering. Big bubbles are rarely about fake technology. Railroads were real. The internet was real. They changed the world. But investors still paid too much, too soon. And a bubble doesn't burst the day people decide the technology is worthless. It bursts when the cost of feeding it climbs higher than the confidence holding it up. The danger was never disbelief. It's the bill finally coming due. And that bill is arriving right now. Hundreds of billions in enthusiasm is about to be tested against the only question that actually matters. Not, do you believe in AI? But do you have the cash, today, to back it? If enough investors hesitate, the whole thing wobbles. So is this the top of the AI bubble, or just the calm before the next leg up? Watch this next to find out.